So gold, had you been trying to short that because fundamentally the data is good for the dollar, look what happens, right? So the data comes out. Um, there we go. Let's go to a 1 minute chart. So the data comes out, trickling into the data, and bang. All right. So that's dragging everyone short, right? Everyone and their uncle would have been shorting that in anticipation of a carry on into yesterday's low. Given that we got a market that broke out of yesterday's highs, trapping traders long, then it came inside. Okay, so everyone being clever thought, right, everyone's trapped going long, so I'm going to go short on the data. The data only goes to justify their short in anticipation of a waterfall sell-off. And why not? I mean, the thesis was correct. Selling below yesterday's highs in 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 anticipation of taking out the lows of yesterday. We've got 3 days of longs in the market. Absolutely, there was a setup to go short. I'm not denying that. But is it wise to take it over a data event when the data is sometimes used by large market participants to get out of their position? So the institutions may have already had their models predicting such an outcome, and they may have already been shorting uh, gold ahead of the data. Okay, um, and then they need to get out of their position, so they use everyone's liquidity that are shorting the market, all right, to buy their shorts to get out of their own short to go long. And I mean, I haven't even looked at the reason for why this might be breaking higher. Um, I'm not going to hazard a guess, but at the end of the day, it's breaking higher. So, as the trend predator indicator tells us, we're in uptrend, we're in a breakout continuation, low hanging fruit. Trend trade is a 2-star setup. We've got uh, strong buyers in the market pushing that along to the upside and targeting. I mean, I'm not going to guess where this is going, but I'm going to assume that we're heading up to a naked point of control over here, which takes us to 2688. Make that red for resistance. Above there, we've got a naked value area high, essentially the highs of week commencing Friday the 13th. Sorry, day Friday the 13th. Sorry, so that's the daily chart. Let's go to the weekly chart. So those are 2 daily levels to the upside. Let's go to the weekly chart. I thought it was on the weekly chart. The weekly chart gives us, a point of control round about the same place. That's we're heading up there now strongly. And then above that daily value area high, we have 2697. Who's to say this can't tear all the way through? But those are just some indications for where the market might be heading. All right, in a breakout continuation trade setup. Let's go back to the trend predator and monitor that on a 15-minute chart. The average range of gold on any given day, I mean, today's a bit of an unusual day because it's a Friday and because of the data, is round about $34. We've only done 21 of those, so we can easily come up to that weekly target, in my opinion. All right, so breakout continuation, bullish market. Now, having said that, we're quite long on the week, but again, it's a first green week. So I mentioned that in the prior videos. If we look at the weekly charts, we can see that we took out the stops below the inside week. Then we pumped and broke the highs of that inside week. We stayed outside this week. Well, I mean, we dipped in below a little bit, picked up some fuel to go higher. So we're breaking higher in line with that first green week. Okay, so dropping, and short squeeze into the trailing stops.